Now let's take a deeper dive into M&A in 2025. Joining us now is Vito Sperduto, head of RBC Capital Markets US. Vito, good to see you.
Great to be here, Josh.
Let's start a big picture, because I think when we heard, Vito, Trump was moving back into the White House, there was excitement about M&A. You're going to cut the regulations, the red tape. Here comes the M&A party. Is that what happened?
Yeah, well, unfortunately, a lot of people thought there was going to be a euphoria in terms of M&A this year, and they forgot what happened during Trump 1.0. Where there was the same excitement post the election in 2016 that we saw last year. Everybody expected less regulation, less tax, a more favorable regulatory environment that was going to drive strategic combinations. And we had the same thing happen. I think folks, as soon as we got to January, were adjusting and seeing that the uncertainty created by some of the policies, some of the speed with which the administration rolled it out, created an issue where you weren't able to adapt as quickly as possible. And so we had a strong first quarter from an M&A perspective, but a lot of those deals were already in the works and were going to happen. Now, as the tariff announcements came in April, that's when you really started to see a significant pause. During the first Trump administration, it took about 12 months to get to a place where companies were really prepared to transact. I think it's going to be quicker this year just because it's happening on a quicker pace. And also, I think people have learned there's a great level of resiliency and you know a bit of what you need to do. And a lot of it just depends on how prepared you are.
What if, Vito, we hadn't had the Trump tariffs and the resulting uncertainty? What would the M&A environment have looked like?
Well, I think that is a very high level of uncertainty that's been created by tariffs. And I would say that when you think about making a decision, if you're the CEO or if you're a board and you're sitting there and trying to decide, knowing the forward outlook, having confidence in your business, having confidence in the market is one of the biggest drivers of you being able to make that informed decision. And I think the tariffs probably created a level of uncertainty, especially given the levels that they were introduced at, how quickly they were introduced, that it's happening overnight in many cases. The pivots are a concern as well. But I also think if I look at other periods in history, and you think about the global financial crisis as an example, or even during some of the COVID environment, there were fundamental issues in the market that we had to get around. Here, the fundamentals are strong. It's just the uncertainty created by policy that's causing the concern. And so I think once we have greater certainty on policy, we're going to see a significant wave from an M&A perspective.
And where would you see, to the extent that we see a pickup, we see that wave, where would you expect to see it? Is that energy, healthcare, tech?
Sure. So I'm going to cap out and say a lot of all the above. And so I would say tech and healthcare always lead the way. And as David mentioned, the investment in AI infrastructure has driven a significant consolidation in tech. And they're trying to acquire that technology in a fashion that drives also their organic growth. Healthcare, you're always seeing big pharma pursue replenishment of their pipelines through acquisitions of smaller biotech firms, and that's continuing. I think on the energy side, we've seen a robust energy M&A market year to date, just given that a lot of that is driven by some strong fundamentals in the US. And there's also, as folks look at renewables, that's a big one. But then the other sector that you didn't mention, I would say, is beyond the industrial sector, where I think industrials needs to add some supply chain diversity. And I think they're going to use M&A to do that. But the financials, I think there's going to be a significant wave of consolidation in the bank space. People feel better about that space. I think some of the regulators that are in place there have signaled that that's something that they're open to. And so I think those areas are going to drive a bit in the second half.
We heard today from the Fed. This is clearly a Fed, Vito, that is in no rush to cut, right? What does that mean for the M&A environment?
So I was listening today, and the thing I was concerned about going into it is how strong was Powell going to be in communicating that he still expected rate cuts in the second half of the year? I think the messaging was that there's still expect to be 2 rate cuts, likely 50 basis points. I think there's been some stagflation commentary. But again, these are all things that were expected in the marketplace. So I feel like if we're heading towards that and we get to a point where we see some cuts, that's also going to be a driver for some increased confidence on the part of CEOs and boards.
Last question. Changes at the FTC, right? Lena Khan out,
Yep.
Andrew Ferguson in. What does that mean? Implications there?
Well, look, I think there's policy, and then there's the personnel that are applying that policy. I think that both the FTC and the Deputy Attorney General for Merger Enforcement have been pretty vocal in terms of looking at transactions on the merits, being more open to remedies. Meaning, for example, a combination happening and going in and saying, we're going to divest this asset to try to solve an anti-competition issue. They've been very prescriptive and said there's a small universe of transactions we're focused on, and those are the ones that hinder competition. I think as opposed to the prior administration, it's going to be a little bit less about trying to drive policy beyond what immediately happens as a result of a transaction, and so they're going to be much more tangible about it. So look, I would hope that it gives us a clearer definition of what to expect when we go through it. As an advisor, when you're talking to clients, the key is being able to say, look, here's how they've acted, here's what we expect out of them, and being able to actually give a piece of advice like that is important to us. So I actually think that's going to be a positive for the environment.
Vito, great to see you, especially on set. Thank you, sir.
Thank you for having me.
That is wrap on today's Ask for a Trend. Be sure to come back Friday at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.